friends, welcome back to the Finance Scribble. Today I'm talking about one of my favorite things, the health savings account or HSA. I can totally nerd out about HSAs, so I'll try to not go too overboard. Make sure you subscribe and come back for more videos like this. Health savings accounts are as they sound, a savings account where you can put pre-tax money into for medical or healthcare expenses. They allow you to pull money out tax-free as long as they are for qualified medical expenses. There are some eligibility requirements for HSAs and a few little nuances to note. You have to be enrolled in a high deductible health plan that have at least a $1,500 deductible for individuals or $3,000 for family plans. You must not be enrolled in Medicare at the same time. Also, no one can claim you as a dependent on their taxes. Lastly, the out-of-pocket maximum must not exceed $7,500 for individuals and $15,000 for family plans. Contribution amounts usually change each year, so make sure you look up what they are for the year you are contributing. For 2023, they are $3,850 for individuals and $7,750 for families. If you are 55 or older, you can contribute an additional $1,000. Also note that if your employer contributes to your HSA as well, their portion is part of the maximum contribution. You cannot use HSA for non-qualified medical expenses. Otherwise, it will be taxed as regular income and you get a 20% penalty fee as well. After you hit 65 years old, though, the penalty comes off and you can take out your HSA funds for anything and just pay income tax. But still no tax if it is for medical expenses. The medical expenses do not include insurance premiums, though. HSAs are probably not for people who typically have very high medical expenses. Having an HSA means you have a high deductible insurance plan, so you have a lot of out-of-pocket expenses before hitting the deductible, and even afterwards, there's usually copay. It's probably not worth the tax savings if you spend a lot on healthcare each year. Definitely weigh your options and see what makes the most sense for your situation. For us, we hardly ever have medical expenses, although I say that, but this year I've already hit my deductible of $1,500 and have spent way past that amount, and it's only April. I guess it all caught up to me this year. Anyways, it still makes sense for us to do an HSA, as I don't expect/hope this year is an anomaly, and most years we won't be spending too much on medical expenses. The thing most people don't know is that you can invest the money in your HSA as long as you have more than $3,000 in there. You can invest any amount over $3,000. At least that's how it works with my HSA. They want to make sure you keep at least $3,000 for medical expenses. I don't love the platform my company chose to put our HSA in, but if I do leave my employer in the future, I'll roll it over to Fidelity or Vanguard to have better options when investing the funds. The triple tax advantage that you hear about all the time for HSAs comes into play when you invest and grow that money tax-free. Money goes in before tax, it grows tax-free, and money coming out is tax-free as long as you use it for medical expenses. No other accounts that I know of lets you do this, which is why it's a powerful financial tool. Those in the FIRE community, FIRE standing for Financial Independence, Retire Early, use this to supplement their early retirement. Most people contribute while they are working, but don't use it for medical expenses along the way. We will use us as an example. I've had an HSA for the last 3 years that I've worked with my company. It currently has about $14,000 in there. Everything over $3,000 is invested. We pay for any medical expenses out of pocket and just keep the receipts in a digital folder. Then when we hit FI, we'll make claims against my HSA to get a reimbursement. There's no time limit as to when you can make a claim. So you can make a claim for something you spent 10 years ago. For the next 10 years, while we are still working and contributing to our HSA, it will be invested and allowed to grow untouched. Let's touch on HSAs versus FSAs. FSAs are flexible spending accounts. They are also used for medical expenses, but does not have the triple tax advantage that the HSA has. Funds inside a FSA does not roll over each year, so it's a use it or lose it situation. But they could be a great option for those that have high medical costs, and HSAs are not an option for them. My projection is that my HSA will be around $75,000 if I continue to invest it and continue to contribute around $3,800 per year with a 7% estimated average return over 10 years. That's a lot of money we can use for medical expenses at that time, or reimburse ourselves so we get the cash to spend on anything else. That's it for today. Make sure you like, share, and subscribe, and follow me over on Instagram. Come back next week for another video. Thanks for watching. Happy scribbling. Bye.